I created something called gifting into perpetuity, otherwise known as don't let your charitable organization suffer just because you made a mistake and passed away. What do I mean by this? Well, I believe that for those of us that give to charity, we do it from our hearts. We do it because the organization matters to us. And I believe wholeheartedly that if it matters to me today while I am alive, it will matter to me in 10 years, if I really believe in this cause, when I'm still alive, and even 20 years. But does my generosity to charity stop because I made a mistake and dropped dead one day? I would like to think otherwise. So let me share with you how to gift into perpetuity. You may be someone that gives $50,000 a year away to an organization. You may give $100,000 away. You may give 20. Let's use 50 for the moment. You're a big donor to an organization. That organization relies on your $50,000. And just short of them doing something that upsets you, you're going to continue giving that $50,000 a year away as long as you're able to comfortably maintain it. But what happens when you die? Will your children take the same interest in that organization? And will they continue the $50,000 a year? Most probably not. Some of you may have a foundation or may have put money away into some kind of donor-advised fund or any other charitable entity. But let me share with you a way to make this very simple. If I were to buy a $1 million policy on you and your spouse, and again, let's use the age of a couple age 70, I know it's going to cost me $16,000, $17,000 a year for that $1 million of insurance. Well, if I'm already giving away $50,000 a year, I just, as the charity, need to convince you to give us $66,000 or $67,000 a year. And if the charity is smart, they would say to you, or you might say to them, maybe we can arrange some deal where the charity will split it with us, the insurance. If it costs us $17,000, we'll put up $8,500, the charity will put up $8,500. But what's my thought behind this? By creating $1 million of insurance that is ultimately owned by the charity, and remember, your dollars are all tax deductible when you're giving it to the organization based on your adjusted gross income and complying with the tax laws. Well, if we create $1 million for the benefit of the charity after you and your spouse pass, the charity has $1 million, and at 5% interest, that's the same $50,000 a year that you were giving while you were alive. The bottom line, don't let your generosity to charity be stopped as a result of death. Buy life insurance within a charitable organization, take advantage of an extra tax deduction, and take advantage of the fact that that organization will continue to prosper even after you are gone as a result of the money that you created for them to invest and maintain that same $50,000 a year in perpetuity.